Howdy. Welcome back to Dion Talk. Why investors fail. Is this why you might fail? Or don't let this be why you might fail. This video I owe thanks to my friend uh, Curtis for pointing this out in a recent interaction. Curtis is starting his journey to reach financial freedom, which is what I did. I was not in a great position. I found myself uh, at 40, having pretty much never thought of money before in my life. I was a single parent with three kids, found out about $89,000 in bad debt in my name I didn't know existed until the divorce, and I got laid off from law enforcement because of the 2008 housing crash. Because when there's a recession, we don't need cops anymore. I started teaching at a truck driving school, making $17 an hour, and I invested for a little over a decade and retired at 52. Never have to work again in my life, and now I share my information with people like you who maybe want to make work optional too. It took a decade, and when I first started thinking about investing, I made a plan. I thought if I can buy a property every couple of years, in 10 years, I'd have five. The original plan wasn't financial freedom or to retire early. I just actually had this thought that eventually I'm going to be so old that I can't work. And the best thing I could do for my kids is probably not even create generational wealth. I just wanted to make sure that I could make sure I took care of my finances so that I don't become a financial burden to them when I am too old to work. And I thought if I had five rentals, that would probably be the case. So I pictured the 10-year journey. At 2 years, I'd own a rental. At 4 years, I'd own a rental. At 6 years, I'd own a rental. At 8 years, I'd own a rental. And at 10 years, I'd own a rental. And there's a lot of people who have the foresight to understand that real estate, which is what I chose, and stocks or crypto or whatever investing strategy that you choose, it is ultimately always a get rich quick scheme. You just have to understand that 10 years is quick. If somebody is telling you about real wealth building and it can happen in 18 months, uh, run. It could probably happen in less than 10 years. You might be in a better starting position, but this expectation management is the main reason why investors fail. So if I looked at my 10-year plan and I thought at 2 years, I'm going to buy a property, at 4 years, I'm going to buy a property, eventually, what I'm going to do is I'm going to start with a zero income from assets, not selling my life 1 hour at a time. Ultimately, what happened is after investing for a decade, my 8 properties with 18 rental units generate about $21,000 a month in profit. So I figure what I've got here is the expectation management of a 10-year journey. So the bottom of this chart, 0 to 10, you can see that if we start at zero income from our assets, meaning if you sell your life 1 hour at a time at your job, who knows what your income is? But from your assets, when you start investing, before you have any, your income, your cash flow is zero. If you invest in real estate for 10 years, or if you invest in stocks for 10 years, and you have a goal of you make enough money to put money to work, or if you invest in crypto to where you think at the end of 10 years, you would be able to have $20,000 a month that you can live your life on. This is what the chart looks like. And this chart right here in front of you right now is why people fail. The first step, the hardest step to get people to understand is that it's going to take 10 years. So there's so many people that think I'll be financially free in 1 or 2 years. They start investing. They don't make $20,000 a month in 2 years, so they quit. I understand it. I guess the main biggest reason people invest or fail at investing is they never start, right? So there's a larger group of people who just never start. They get stuck in analysis paralysis, or fear keeps them locked in, or they watch too many crash videos. And so they never do anything. But for those people who actually start, who start putting money to work, if they're if they think it's going to happen in 1 or 2 years and it doesn't because it's going to take 10, they'll quit. But let's look at it another way. Let's say you're sitting there and you think, okay, I'm going to invest for 10 years. My friend Curtis is 3 years into his investing journey. So at the 3 year mark, His expectation on that XY axis that went from 0 to 20 in a straight line means that he thinks he is going to be making at the 3 year mark 6,000 a month because that's about a third of the way there. At the one third point, at the 3 year mark on this 10-year journey, his brain, even though he understands it's a 10-year journey, is thinking, I should be making $6,000 a month if the goal was to make 20. But in reality, because investing uses compound interest, compound sources of income, hockey stick growth, at 3 years in, if Curtis's net monthly income is under $1,000, but he was expecting $6,000, what's the likelihood that he quits? This is expectation management. We have to think, I'm a third of the way through. That doesn't mean I should have a third of the potential income that I would have based on my investing strategy, whether it is stocks, crypto, or running a business or real estate. So right now, Curtis, I could tell you, he's probably not making $6,000 a month. Even with house hacking, he's probably not even saving and making up to $6,000 a month. So if he was expecting that, if he'd never seen a clear visual laid out like this, the point of this chart is so that your brain can actually process how big the gap between reality and expectations are. When we think in a linear line from 0 to 20,000, this is what it would look like versus how it actually goes. At the 3 year mark, this is very close to where I was at, probably a little less. Uh, so let's take it a step further. At the 6 year mark, this is 2/3 of the way into a 10-year journey, basically. Our brain says at 2/3 of the way in, so over halfway, I should be making way over 50% of my goal. So if in 10 years I should be making 20,000, that means at 6 years I should be making more than 10,000, right? At the 6 year point, expectation is we should be making around $12,000 a month. Reality, at the 7 year point, at the 6 to 7 is when I started to see a little bit more income coming in. But at the 6 year point, making a little over $1,000 a month because you're reinvesting the money, you're doing the value add propositions that cost money, you're uh, learning how to negotiate better rents, you possibly are spending money to refinance that monthly income. These first 5 years, we talk about it often in investing circles, they flat out suck. Imagine if you thought I should be making $12,000 a month and you're not even making two. You gonna stick with it? If you haven't seen a chart like this, if you haven't seen it laid out, that the expectation management is it's very slow to grow in the beginning because this money's not coming to me. It's being reinvested in the portfolio. I'm doing repairs and maintenance and upgrades, dealing with evictions and tenant turnover. You haven't had compound interest hit your stock portfolio yet. Of the 9 crashes above 50% in crypto in the last 10 years, you haven't realized that it is still the best performing asset of the last decade at least. This is why people quit. Our brain says, I'm 2/3 of the way there. My goal is $20,000 a month. I should be 2/3 of the way there. Less than 2,000 is definitely not 12,000. So now, as we get closer to the end and we get into the, like, let's say the 9th year, the the third year, the third set, you know, almost done. We're getting into the end of the race. Most people already quit. When you did a third and you weren't a third of the way there, that's frustrating. When you did 2/3 and you weren't 1/3 of the way there, that's debilitating. Imagine how many people quit before they got to the point where the hockey stick growth starts to kick in. We're in the 9th year now. So we've gone in 3, 6, 9. The way our brain still says we're so close to that 10th year, we should be making $18,000 a month because we're going to, in 1 year from now, we're going to be making 20. How could we possibly still be less than 10? You're almost to the halfway point in that last year. It's this last couple of years where the magic happens. This is where not only have you owned a property, it took me 2 years to buy one. So if you bought that first one at the second year, you're coming up on 7 years of rent increases into this ninth year. You've had it for 7 years. That's 7 years to renegotiate, hunt down better insurance quotes, raise your deductible because you have more money to lower your premiums, argue the county tax assessor to get your taxes down, use the binder strategy, possibly have tenant turnover, which gets you a bigger rent increase. It's the better thing to happen than the binder strategy, where the tenant asks you to raise the rent. Maybe you've had an opportunity to refinance, get a lower interest rate. It's these last couple of years where finally, after all of this time that we've put in and all of these years where we thought I should have been making more, why wasn't I tracking on that linear line that took me to the halfway point, halfway through, that you finally get to experience the income snowball. You've had one property or one asset now for several years, the next one for years. You've have multiple sources of income. You're making more at your job, or you've changed jobs, or you've learned a new skill to make more money. Your assets are compounding to where you get to that last 10th year. That last year when you hit your goal because of hockey stick growth, as long as you didn't quit at 3 years in when it sucked, or 6 years in when it sucked, or even 9 years in, 1 year away from your goal, there are people that will think, I'm not even halfway there yet. This must be a 20-year journey. They might quit. The point was to show you clear visuals on how long it takes to see the impact of what you're doing. This is a nice short video that I put on here for people who would never click on a 2-hour video. If you want your questions answered during a live stream every Tuesday at 4 p.m. Pacific, I do a live stream that lasts as long as the questions do. I hope you have a week full of amazing, and I will see you in a couple of days in the next video. Or I will see you Tuesday at 4 p.m. Pacific when I answer all of the questions that come in, even the rude ones.